Good day, traders. This is Rich with some price action on the markets. Currently 4:40 p.m. February 2nd, 2022, Wednesday, hump day. Hope everyone was doing well today. Markets are choppy, and they've been that way for some time. So how do I handle it? I'll let you know. Make sure you subscribe to the channel, like the video, share the video, and comment on the video. That's right. We've had some choppy markets over the last few weeks. A lot of movement downward. And I am trying to take advantage of this kind of like meandering snake-like moves up and down versus being the inflection point breakout trader that I am. I'm usually looking for this break here, right here on this candle. I'm looking at this candle here at the opening. I'm looking for the break here, and then it fails on me. And that's what's been happening to me for the last, 6 months or so. I mean, not every time, of course. So now I've been looking at other means of trading, kind of scalping, smaller share size, willing to give stocks some room against me. And the most I'm going to lose is like $30 or $40 and not going to really sweat it versus losing like $300 in like a second. And in this case, this is kind of like a quick scalping method that, there's plenty of ways you can get into trades. I found that when you find the right stock, now I'm looking at the Qs as my basis, but when I'm trading Facebook, Microsoft, Apple, AMD, and anyone that's really moving up or moving down. Depends on what kind of market we're in and what kind of stock I want to be trading. But for the most part, we'll stick with like QQQ versus Apple, and I will make trades based on that information. Now I'm just going to show the QQQ chart because I don't want to make this a long video. It's just kind of sharing a strategy that I've been looking at for some time. The only reason I'm posting it too is because I feel like it's out there. I like it. I think in a scalper's market or in a market where you're very choppy and you're used to taking breakout trades and they keep failing on you and you're like hitting you in the face like 10 times in a row. This is kind of nice to just take small share size. I mean, if you're used to taking 1,000 shares on something, take like 100 or 200 shares on this because it just keeps you in the game, keeps you active, keeps you reading the tape, following what's happening in the markets and not forcing anything. And I think that's the problem I've always had is that if I get bored or like I just, feel like I need to be in a trade because I'm sitting here, I'll just take some random trade, breakout, bogus thing, and it didn't work. So in this case, I'm trading big names where there's plenty of liquidity, get in, get out. And, I feel like it's been pretty good. Now, there's a couple times where I'm like, this is going against me. But then it kind of, in a choppy market again, it tends to fall back into place. So let me go through it real quick. There's this, I'm a few minutes into this video. I just want to make this a quick video. I'll have another video in the future about this. And you guys let me know if you have any questions as well, because I'm more open to listening to whatever you got when it comes to kind of like scalp trading for a few, I'm looking for 10 to 30 cents. With breakouts to further, moves. The goal is to shed some shares, let the rest run and shed some more and let the rest run. And if it comes up to your stop or it comes up to your entry point, you get out. And, there's no stops in this. It's just kind of like watching the tape and feeling what's the volume is happening. That's another thing. I have these volume sticks down here. It's pretty critical to watch what's happening here. You're looking for capitulation. You're looking there's some really good setups here with volume, very important piece. And I'm looking for these. So this is TradeStation. You can add this to your charts. It's what's it called? The study is 3 bars down or consecutive downs and consecutive ups. I use a 4 and a 4. So when instead of 3 is a little tight, 3 is a little not giving enough room. I'm looking for a stock that's kind of making its move up, kind of getting away from, like in this case, getting away from the EMA. It's got to come back in. This is a little bit extended, kind of upside shapy. This is the time to get in a stock short, right? And the same case down here, when the stock is coming down, you can get in. Of course, don't mind this yellow line. You do not need this one. But then you see it and you're like, this is a good spot to get in because it's away from the 8 EMA. We can come back up. Now, if we had taken off, and fallen further down, that's one thing. But in this case, we were kind of like looking to bounce back up. And the choppy markets we're having it just been like constant, flow. So I'll just go through it. Like in this case, it kind of worked, but it didn't work. And once one big igniting candle down, then you don't just get in a trade. Like I'm looking at Apple on my other chart. You don't just get in the trade. Let this thing settle, you know? You got to let something kind of like, sometimes it has to be really quick because it'll just kind of flash back up. But when you're having these candles, you want to let them settle. These are huge bars down. You're not just going to jump in a long trade when the market's moving down. But at the same time, because it's moved down so many times in a row, you can expect a little bit of bounce up. So it did work out there. And here's another 1, 2, 3, 4 down. It gave me an alert. I looked at Apple or AMD, and I'm like, okay, this thing's going to turn back up, and it's at least going to come back to the 8 EMA, maybe VWAP, which it did, and this was a nice little move. So same thing going back up. You had 1, 2, 3, 4. I'm looking for my turn here, but it ignited back up again, and then once this kind of stalled out on this candle, then I look for a short. Same idea, right back up. This is what the chop does. Chop will not, in the markets we saw in 2020 and 2021, this market would go up, come back just a little bit, and then continue up and make new highs and new highs. But now we're just kind of falling into this range. And the same thing here, all these bars down can get a little questionable, but it bounces up. But here's a case where you wish you got in with 3 bars, 1, 2, 3, turn around, right? And then the same thing, 1, 2, 3, 4, quickly you had to act, and you got in with this one. Now, I'm not trading the QQQ. I'm trading Apple, Microsoft, Facebook, or any other big name stock with a lot of liquidity. Going through this, you can kind of see pulling back here, coming back up. Here's a good case of it kind of flushing down to new lows, big candles down, big volume stepping in. So we had all these candles of volume, but then we had 3 big candles of volume here. And then once we saw the green turn, I knew this thing was going to bounce back up, at least to the 8 EMA, and it kept going pretty good. So 364.50 all the way to 366, almost 366.50, almost a 2-point move on the Qs, which is almost like a point on Apple, if I had to guess. Maybe more. But then there's times where there's nothing, right? We have all these candles, like almost 1, 2, 3, didn't happen, kept going lower. So these things were like kind of like missing areas, but that's okay. We're looking for like 1, 2, 3. It turned around here, but we want 4. 4 is the way. 4 is the way. Even though 4 happened here, it didn't happen because there was I don't know why it didn't happen there actually. Here's an example that you had 1, 2, and then this little candle here, 3, 4, 5, and it's kind of saved you because you didn't get in with, if this was a 4th candle, you might have gotten in on something right here. And here, a little quick one. And then here's kind of pop and move up here. Here's a nice climb up with a nice reversal back down to the 8. And then a nice move up here and a nice pullback here. So imagine trading the bigger name stocks like Apple, Facebook. And then, we're going 1 o'clock. And here's like 1:30. We finally that's 30 minutes. So it's not like it's every minute too, which is nice. Kind of like gives you an idea of what you can get into here. You got to be careful. Now, if you get in on a trade, let's say you get in here at 367.60 on Apple or something like that, and it pops a little bit more, you got to hang on. Look back a little bit. Look, where's your last resistance area, which was right here. And it could have saved you. And look, you could have gone in. And if it goes against you, then once it gets to your price point or maybe a couple pennies in your favor, get out. You don't have to look for the bigger move, even though it worked in this case. You just have to consider what you're trading at the time. Here's 3 bars. Here's all these bars down, right? So if this green bar didn't happen, 1, 2, we'll call it 3, 4, 5, 6 with a capitulated volume right here. Boom, this was a monster, right? Same thing with this one. You could have gotten on this one, but you're looking at 225 just after lunch. One of those things where you're not too sure about it. Here, I don't know why this one gave me an alert because we did have a green bar, but it did. Excuse me. Here's a case of a big igniting bar, which is what you want. You want a big igniting bar with big volume, and then a secondary candle, and even a 3rd or 4th. In this case, it was a 4th, which we want, and then it reversed back down. Here's 4 down. I'm just going through this. You can kind of see what I'm going at here. And even at the end of the day, you had the same thing. We had these big candles that up, another candle up. You're like, no, this is at too high. And then it flushes back down. Then it can get a little choppy. So for the most part, anytime you see the 4 candles on a 1-minute chart, you can see some kind of reversal. Maybe it's not that big every time, and sometimes it will go against you a little bit. But you got this again, choppy markets. This is for choppy markets. You know, you were expecting the price to go up, fake you out, come back in, go down, fake you out, go back up. Because in a breakout market or a breakdown market, this will not work because, well, it will, but there'll be times where you get in and it'll go against you and it will continue to go against you. So keep this in mind. This is just a strategy I've been watching, and if you have any questions about it, let me know. I'll get into some more details in the future. I thought it was pretty cool. There's a lot to be had here. You know, I'm not, you know, today I made $50 on Apple on maybe 10 trades, which is not that much, but I was only taking 5, 10, 20, maybe 15 cents at the most on 100 shares per trade. I was never trading more than 100 shares. Kept me busy, kept me focused on the tape, and I made $52, I think it was. You know, I made most of my money on AMD this morning, but other than that, it was pretty good. So sorry for the long video, drawn out a little bit. Something to watch. If you have TradeStation, you can add the consecutive bars alert pretty easily. And oh, by the way, if you do have it, just go to Edit Studies, you click on it, and under alerts, set it to enable alert, and then say alert once per bar interval. Don't set it to continuously because it'll just be like dinging in your face. So just set alerts per bar interval. Okay, make it a different color than your chart so you can see it standing out, and you'll be good to go. Okay, so this is Rich with some price action, and I hope everyone had a good day. Make sure you subscribe to the channel if you're new, like the video, share the video, and comment on the video. And hopefully we have some good marketing conditions going forward. Looking a little sketchy, but we'll see. Have a good night.